This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome back to the Research Talks podcast here on Stockbox with Alan Green. Alan, it's Friday again. It's come round rather quick and bit of a red day, certainly over the United States this morning, but it's not spilled over too badly into London, it doesn't seem.
Good morning, Mark. No, it seems to have had a muted impact, I think, on the London market. And, we're already seeing the index start to drift back up slowly again. So, but, as we were saying before we came on air, I think it's good to have these little shocks now and then. The market needs these corrections. And of course, that movement does provide opportunities for people to maybe get into stuff they've been looking at a lower price or at a price they consider good value. So, volatility like this creates liquidity and volume in the market. So it's always a good thing.
It's always a good thing. Yeah. And perhaps as well, London, we've said before, haven't we, that London seems to be lagging behind New York. So maybe that's why it's not taken as big of a hit. But I think London's still due its nice kind of run up like the rest of the world seems to have seen. So anyway, I guess we'll see what comes from there. But today you're going to be talking up to us about Panther Metals, who of course discovered the VMS on the Abonga project.
They did.
And Echo Energy as well.
Indeed. Well, developments at both these companies. But let's start with Panther Metals first of all. Of course, Darren Hazelwood, the CEO there, he's a very thoroughly nice chap. I met, in fact, and had a chat with Darren before Christmas in London, and just had a good catch up. Very interesting to hear his views and perspective on the way things are going. And of course, they recently, following the float of the Panther Metals Limited Australia, Kerem Sina, the former chairman, stepped down into a non-exec role, and Nick O'Reilly came in as non-exec chairman. He's got over 14 years experience in mining and major commodities, and of course, being a qualified geologist, he's the competent person in-house for JORC code and AIM rules, very important. Darren is a team. I say they really delivered a great a series of steps forward in 2021. Although perhaps looking at the share price chart, that may not be borne out. But I think, as we've said before, Mark, on many occasions, the junior resource stocks really have had a fairly torrid time of it over the end of 2021, and we're all looking for recovery in 2022. But certainly. The company has a raft of projects in Australia, of course. Aside from the Marikai and Nabaroo projects up in Northern Territories, the gold project, in particular the Coglia. The Coglia cobalt project in the Southern Territories has really started to deliver huge potential for the group, and these assets were packaged up into Panther Metals Australia Limited. Panther Metals in the UK, of course, holds 36.6%, and now, of course, the team are progressing. They announced on December 16th that they'd started drilling at the Coglia project. They'd undertaken a 6,000-metre drill program, expected to be completed next month, to establish a maiden nickel and cobalt mineral resource estimate. And then, of course, the drill team will move on to the 8-foot gold project. Package of assets in Australia saw Panther Metals Australia come to market with a market cap of just under 11 million Australian dollars, and that's of course bolstered the Panther Metals balance sheet in the UK. And this is a model that's being utilised by a lot of companies now, where assets are spun off separately and packaged into separate companies. And of course, as we've spoken before, Paul Johnston of Power Metal Resources, who I also spoke to this week in a 4-part series where we looked at the business. The company's business model is very much based around that. So Panther Metals have progressed the Australian assets, and of course there's now drilling news is very much imminent on the Coglia project certainly by the end of February. The company has also a series of assets in Canada, and really this was, I think, where the company first came to prominence last year. A series of projects. So, of course, if you go to Ontario in Canada, you have the Ontario state borders, of course, some of the northern US states, and you've got Lake Superior there. And the northern shore of Lake Superior is awash with mining projects with huge potential. The Barrick-Hemlo gold mine, of course, and a raft of other world-famous mines that are producing minerals and gold and many other battery metals. And this is an area that's dotted with hundreds, if not thousands, of lakes. It's mineral rich. The road network and the transportation network has improved. So there's good access to power. So it's a very, although the territory I think is challenging, it's a very rewarding environment to work in. So there are 3 principal assets in Canada. Of course, there's the Big Bear project, which is very close to the shore of Lake Superior, the Dotted Lake property, and Dotted Lake is to the east of the Barrick-Hemlo gold mine, also close to the Palladium 1 mine, where there's a lot of research activity and developments that have taken place there. And Dotted Lake progressed, those significant progress announced last November by Darren and the team. A soil sampling program had been undertaken, and through that, the company located a 1.3 kilometer long gold anomaly, along with 4 other gold anomalies and 80 multi-element anomalies. And of course, this preliminary work, helps delineate drill targets. It helps focus the group, and of course, together with aeromagnetic surveys, a picture can be built up of the geological anomaly under the ground, and targets selected to go in accordingly. So we await news on Dotted Lake, but nonetheless a very exciting progression. And then of course we have the company's. I think now we would say that for Canada it's the company's flagship Bonga project, and this is up in the west of. It's actually to the northwest of Lake Superior. There's a big lake called Lake Nipigon, which is probably getting on for a quarter the size of Lake Superior, and the Bonga project is the west of that on the Bonga Lake, and this is an asset that it's across the Bonga Greenstone Belt, which is some 32 kilometers long by 9 kilometers wide, broadly east-west, and it's composed of orogenic shear-hosted gold deposits and VMSs, that's volcanogenic massive sulfide anomalies. So Panther's Bonga project covers pretty well all of the Greenstone Belt. That's 88%, and they're working with the partner company Broken Rock Resources, headed up by Leanne Boyer, who is well known to the Twitterati out there following Panther Metals, and the company announced a big step forward this week. The company identified another big VMS at volcanogenic massive sulfide at the Wishbone project within the Bonga region. A diamond drill program is currently underway there, and the company drilled the second hole and basically identified this huge volcanic massive sulfide anomaly, and because of the nature of the asset, the nature of the anomaly, it's highly likely there are several others around. As it's volcanic, then there are likely to be a number of others grouped together in the same area. But just finding this 2 drill holes into a massive campaign just to show the level of expertise that the team on the ground have there, and it's a real feather in, I think, the team's cap, and of course that's Darren's as well, that they progressed and got this sort of result so early in the campaign. I've said about the nature of the target. What that effectively means is that you have an asset, and through already the work that's been undertaken early in the campaign, they've established that there's an elevated level of base metal content down there. So that in itself increases the value of the assets per se, and it then means that that's under the ground. So the search continues with the drilling campaign to find the other minerals that the company believes lies under the ground there. And of course, if you go to the Panther Metals website and you want to see where these assets lie, there's a very good map actually on the Canadian Gold Projects page, on the Abonga Gold Project page. You can see all the projects marked out. But certainly, as I said already, the progress by the team last year with the Australian assets, bringing Panther Metals Limited to market on the ASX, and now the progress with the VMS at the Abonga project in Canada doesn't seem to be reflected in the share price. The company's got a valuation of 7 million, and that's obviously down from earlier in the year. Shares are trading at 10.3p from highs during the year of 16p. So really, we're just off the year lows, and I think given the progress that's been made already, I would expect to hear more news from the ongoing drilling campaign. As I say, we're just 2 holes in already. I expect to hear more progress in the drilling campaign as we go forward, and of course with Dotted Lake, we've got the news coming back from the soil samples very soon. So yeah, at a very exciting juncture, and I think I'm sure Darren will come on with you, Mark, and tell you all about it.
Yes, well, we speak to Darren not so long ago about the VMS. Very short interview. He was thrilled that they found the VMS so early on. And as you say, it does show that the guys on the ground clearly doing the right thing, know what they're doing. And yes, it was on to targeted drilling, and he said he was very excited about this year. Of course, I think the market didn't like the news. Maybe it's the old buy on rumour, sell on news brigade, or perhaps because the result didn't come out with some standout crazy grade, which very, very rarely happens anyway, in my experience in this game. It maybe perceived as disappointing, but from what I understood from what Panther were doing, and speaking to Darren, really the objective was to confirm the presence of a VMS, which they have done. It's very early stage drilling. In fact, I think it's the first drilling, isn't it? It's the first 2 drills on that. Exactly.
Well, literally, the VMS was discovered on the second hole, and I think you're right there, Mark. I mean, just to pick up on your point, when you're undertaking a campaign like this, if you drill down and you discover, a huge gold nugget, and you've got several hundred grams per ton gold, then fantastic. But that rarely, if ever, well, it does happen, but it very rarely happens. The idea is to understand the idea of a drilling campaign like this is to understand the geology, and it's the same the world over with mining companies. We've spoken about ECR and the Kresik and the Baileyston projects, and a lot of the drilling is undertaken at angles to understand the geological folds under the ground and how they've come together, and to confirm, maybe what an aeromagnetic survey undertaken previously has indicated. So this is exactly where Panther Metals are with the Abonga project. The drilling campaign is right at the start. There's a load more to go. 6,000 meters of drilling scheduled up to the end of February, and that's Coglia. That's Coglia. But there's with the drilling underway at Abonga, there's plenty more potential to come, and I'm sure we're going to hear a lot more over the next few weeks.
Oh, I'm sure, yes. And I think, particularly given the drop in Panther as well, I think Panther's a good, potentially a good value buy at the moment. And yeah, it's in an exciting stage. Early stage exploration, found the VMS, now go on and find something more with targeted drilling. And not to be too rampy, but Darren did make a comment. It's the best investment I've made in my life. Now, he obviously is a little bit biased, being the CEO, but yeah, he did make that comment, and I'm not a shareholder personally in Panther, but that might change. I think it could certainly be. It's a company I like the look of for sure, and I think this year could be very, very exciting in this sort of early stage exploration side.
Well, I think the good thing with Darren as well is he's in a sense poacher turned gamekeeper. He's he's been an investor, so he's evolved from an investor into these sort of projects, into the CEO of the company, and now he's heading up. He knows, but he also understands how to communicate with investors too. He understands what he as an investor would be looking for vis-a-vis you and I as investors, and he'll relate that story, and he also knows how to prioritize the activities the company are undertaking in order to be able to report back in a logical, sequential format. So it's that's very important too. There are so many opportunities out there. There are some very poor stories marketed very well, and there are some great stories out there, marketed very poorly. And certainly Darren has got the best of both worlds. I think he's able to communicate extremely well, and they've got, with the assets they have, and obviously, the Australian company operating and developing the Coglia project, where we are set to get a mineral resource estimate. That's we're step by step we're moving towards, putting down a floor in terms of valuation for the company that the company can build on.
Great. Okay, so the other company you're going to talk to us about is Echo Energy.
Yes, indeed. This should be looked at with the interview I've already done with Martin Hull, who is the chief executive of the company. I interviewed Martin last year, and the company's had again, like Panther, it's had a year where everything has changed within the group for a number of reasons. There was, going back to the start of last year. Firstly, I'll just provide an overview of where Echo are. So they're an oil they're an oil producing company, an oil and gas producing company. They have assets, or their principal cash generative asset is in the south of Argentina, right at the bottom. It's an area called the Santa Cruz Sur, and there are a series of oil assets within there that are firstly producing oil and gas, and secondly, some dormant wells through the cash that's been generated by the producing wells. These dormant wells have been brought back on stream. So there's very much exponential growth taking place within the asset. Back to the board, the company, led by Martin Hull, who has nearly 20 years' experience in investment banking, specializing in the oil and gas sector, and has many years' experience within the corporate finance sector, working for Rothschilds. And then we have James Parson, the non-executive chairman, who is exec chairman at Regency Mines and Ascent Resources, also at Coro Energy. And also the company recently announced this week that it hired a new non-exec, Christian Yates, the chairman of Gresham House Renewable Energy, who has many years' experience within the renewable sector and developing renewable energy assets, which you might say sounds odd, but Echo Energy this week took a step into the renewable sector. So I'll look at the renewable sector first, and then we'll talk about the oil producing assets. So over the year, this company share price has it peaked out in March last year at 1.9p. currently trading at 0.43p. So, very much in line with other small cap energy companies and small cap producers. But the company announced on January the 14th it had acquired an option to purchase the Vicente Mendez 3 megawatt solar project in Chile, and this is in central Chile, south of Santiago, and about less than 2 kilometers from a central grid connection. So it's close to a city called Chilan, and the asset can be developed and basically plugged into the grid in Chile. Why Chile? Well, Chile was rated recently by Bloomberg as the #1 investment environment for clean energy investment potential. The country will be taking over 70% of its energy from renewables by the year 2030. So there are a multitude of operations underway on the ground there to develop these assets and bring them online. Echo Energy will be working with a strategic partner called Land and Sea Energy, and they have a huge pipeline of small projects underway there. And to that end, the company, Echo Energy, also raised 660,000 through a placing at 0.46p. So the share price is basically trading around that level now. So the status with the company is it's I'm going back now to Santa Cruz Sur, which are the assets in the south of Argentina. These are producing assets generating an average of just over 1,550 barrels of oil per day equivalent. They've got the reserves based down there, 2P reserves of just over 4.6 million barrels of oil equivalent, as I say, it's in a producing area with a number of wells and a number of dormant wells, and the cash from these the producing wells is being used to bring the dormant wells back online. So very much scaling up the growth potential for the company going forward. I mentioned Echo had a significant year last year. There was a legacy debt position up to the beginning. This is sort of December 2020, January 2021, and the company restructured that debt, and that's why the share price, or partly why the share price, popped up so high at the start of the first quarter. The debt was restructured and pushed some secured notes, 20 million euros worth of secured notes, onto 2025, and a nominal payment was made at that time, and it means the balance sheet has been cleared up to that point, so the company can focus on developing these assets in Argentina, building the production, and getting to the point where cash generation will get to the point where it will be able to, in 2025, clear the outstanding notes once and for all. The other factor that has helped to drive the price last year was a change in the status of Argentinian VAT liabilities, and historically Echo had paid a lot of VAT, and as a result, at 10.5%, as a result, they were able to reclaim $1.4 million. So that's a highly significant number. Looking at the cash that the company generates, it's in the first half of 2021. Of course, we've yet to have the full year figures for 2021. It generated just under $6 million. That's from oil and gas production. It's also able to sell gas. With the gas it's selling, it's able to sell at an elevated spot price, which the company or the team on the ground there in the Santa Cruz are very adept at. And the region, of course, because it's historically been such a prolific region in terms of production, there are oil and gas pipelines that the assets can literally be plugged straight into. So, potentially it's a huge cash generator going forward. But I think with the with the way the world's going. Echo Energy realizes, and I think all oil and gas production companies realize that it's probably a finite process for that industry. And of course, all the big boys are transitioning into renewables. And this is Echo's step forward to do the same. And of course, Chile's adjacent to Argentina, literally just over the Andes, over the border. And that work is already underway. And I would expect very much going forward that once they have the Vicente Mendez solar project done and dusted, they will be looking to pick up other assets in Chile as well. So in summary, Echo currently trades at say 0.4p. It gives the company a market cap of just 5.6 million sterling, and given the company produced just under $6 million cash in the first half of last year, that to me seems incredibly good value. But as I say, the small cap companies are being valued in a very strange way at the moment, and I do expect to see a resurgence in these valuations. But that I think that's the key factor here: a 5.6 million market cap and cash generation from the producing wells of $5.9 million US dollars for the first half of 2021, and during that period, many more wells came online. So I'd expect to see an uplift in that for the second half of 2021. And going forward, I think we're going to see ongoing growth in that production. So, I see huge potential for recovery in the stock.
So do you think the small caps are just not being valued highly, just period, and at some point that might change? Because you're right, that valuation is crazy considering the revenue generated.
It is, yeah. I think there's, for whatever reason, there is a disconnect at the moment, and we've spoken about the commodity super cycle consumption, and oil and gas consumption will continue for decades to come. That won't change, but obviously the move is essentially towards renewables. In terms of where we are right now, I think the disconnect is something to do with Brexit, potential valuation, all the rest of it. But
right.
But the nascent value is still there. The companies are still trading at this level, and I think in many instances, with when you're looking at investing into companies that have these assets, you've got to look at, well, are they producing cash? Number one. Well, Echo ticks that box with a resounding tick. Also, have they in the assets they have in the ground? Can they get them out of the ground easily? Are there historic mine workings there? For instance, with mining companies, could you utilize up to the minute mining and data mining technology to look at an old mine and possibly find a new mineral seam that's as of yet undiscovered? It's all of those factors, and value outs in the market eventually. When there is an asset there, the value will be realized. And I think a good example of that probably last year, the company Bedstack, when it announced this seminal deal, the shares popped up. They literally doubled in price within half an hour in the afternoon, and that's the sort of thing that can happen. So the potential's still there, and I think once we come out of the what we hope will be the final stage of COVID, and also once we get a clearer picture of just how far the Bank of England will have to go and continue to raise interest rates and cap inflation, I think that once we've got a clearer picture on that will entice investors back into the market again.
Frustrating though, isn't it, particularly for shareholders to just sit around and almost feel they're the only ones who see this, and particularly given as well, oil, is it back at all-time highs? I think
it is. Yeah. It's a huge volatility, but yeah, back at all-time highs. So but value will always out.
Yeah, in the end.
I think if you need an example of patience in this market, look at Warren Buffett.
Yeah, exactly. And what's that phrase? The market can stay rational longer than you can stay solvent.
That's right. No, the market can remain irrational for longer than you can remain solvent.
Yeah.
Yeah, that's exactly it. So at the same time, pick your investments carefully and never invest more than you can afford to lose.
Yeah, exactly. Well, thank you very much, Alan. I'll let you go. I can tell you're suffering a little bit from a seasonal cold. Hopefully, it's not hitting you too bad. Waned immunity of not having colds for 2 years. It could be an issue. But thank you very much for your time, and have a restful weekend.
Thank you very much, Mark. I'll take some night nurse now.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.